All right. Matt Davio back from the Market Profile Trading Academy. Today I've got, again with me, Josh Schuler from Fort Collins, Colorado, and I've got Warren Murdoch chiming in from lovely, cool, crisp Houston, Texas. Gentlemen, welcome.
Hey, it's hump day. It's Wednesday.
Happy hump day. Hey, Warren, why don't you give us a little introduction, if you don't mind? Just tell us your background in the trading world, if you will, and anything else you want to offer on your personal life. That's great. And we'll get going today. We've got a great show ahead. We're going to be talking about mutton busting, bitcoins again, football once again, trading, how it is non-linear. We're going to be talking about the non-linearity of trading. Scalping versus long-term trading. I've got on my time frames today. I want to ask the two of you, when we have a chance later, what things you look when you track, when you're trading different environments. I want to talk about Ladbrokes versus InTrade. Warren, you and I were talking about this yesterday. Laddie's had the Pope going off 2-1 yesterday, and in fact, he's won the Man of the Year, so we'll talk about Pope Francis, Man of the Year. And charts that are interesting. Well, as we always get to the charts at the end of the day, and I've got casinos on my talk points today. I've got Julia Louis-Dreyfus. I've got ACL injuries. I've got a lot of things I want to talk about, guys. So
all over the place.
All over the place. So Warren, I asked you, give us a brief introduction. I've known Warren for years. Matter of fact, you actually interviewed me and reversed the tables on me, I don't know, probably 4 years ago now, and we did a little interview that's up there in the archive somewhere. But why don't you give us a little background on yourself again?
Well, I trade primarily NASDAQ and soybeans. I tend to focus on those two markets.
But you've got a history of trading quite a bit of oil products, natural gas products, forex products.
Yeah, I was for about 14 years. I was in energy trading, natural gas, crude, and power. And then before that, it was foreign exchange trading on the days before the euro, the Deutschmark. And so I've been around for bouncing around with different products, and I think I tended to bounce from product to product as the times changed. Obviously, when the euro came in, you couldn't trade Deutschmarks anymore. You had a completely different product. Although I think today the euro is really the old Deutschmark again.
Mm-hmm.
In the energy markets.
Why do you say that? Why do you say that the euro is the old Deutschmark?
Well, the Germans effectively run the European Central Bank, and they are by far the largest economy in the European Union.
Agreed.
And so they call the shots in the European Union. And the one thing when they formed the euro that they were very worried about was they never wanted to have a bout of inflation, the Germans, because they remember what happened to them in the 20s. They've always been noted for having very conservative central banks.
Mm-hmm.
And so the discipline that they had, that they implemented after World War II, that's what they wanted for the European Union. And so the Germans effectively run the European Central Bank. And my joke always is, if you go to Greece or Spain, you have German prices on their shelves, but you have a Spanish or a Greek economy. So things are mispriced there. I mean, in the old days, if Greece got in trouble, they would just devalue and everybody would have a cheap vacation by going to Greece, and that's how they get out of trouble.
Right.
But today they can't devalue. They don't have control of their currency.
So the tourist economy, although the tourists continue to come, can't save their overall economy anymore, is what you're saying, in Greece.
They can't save it because the prices that they pay for bread, milk, the basic necessity are priced as if they were in Germany.
And the jobs don't exist in Greece, for that matter, the rest of Europe, to maintain that level of living that is passed down from Germany then.
No. The labor is literally priced out of the market because it doesn't make sense to pay German wages to a Greek guy serving coffee in Athens.
Right. So what do you think, since we're on this topic, let's get into this a little bit. What do you think of the unrest that's going on in Ukraine right now?
Well, I think that people are angry because of the corruption in the government. That's That's mine. And the Ukraine was all set up to join the European Union, and then suddenly it fell apart. I
Yeah.
suspect because of corruption.
Well,
And
there's definitely deep nepotism there in the governmental powers that be, and I think people obviously are tired of that. Um,
I know they take a big risk by joining the EU because of Russia,
right.
and the
So they're
Russians, supplying the gas to the Ukraine and Georgia, they could cut them off in an instant.
so their heat and their oil and their living availability becomes very difficult because of that old relationship with Mother Russia, obviously.
Historical relationship with Russia, what goes even before the Soviets.
Yeah. So, we were talking a little bit, Warren, and this leads into the discussion. We were talking a little bit about Euro and the relationships with the currency next year. We think you had some thoughts on 2014 as far as the ag markets. So let's transition a little bit into that discussion and how you think some volatility could come back into those markets because of this relationship.
Yeah, the thing that brought that up was the CME reported earlier in the week or late last week that the renminbi has surpassed the euro as the second most traded currency in the world.
Mm-hmm.
Wow.
And that's significant because the Chinese are major buyers of our agricultural products.
Right.
And of course, right now they're paying in dollars, but the relationship between the renminbi and the dollar is going to even be more important next year. And everyone expects, the dollar to start rising in 2014 from these low levels. Basically, what we did was we devalued our currency and exported our problems to the third world. And so that's the reason why they're having problems.
And again, very similar to the German equation. The Germans also, just like they're doing in Europe, they've exported their problems to the rest of the Euro Union, and the U.S. Has continued to do that. Whether it's South and Central America, our local partner, we've continued to obviously export our problems that are still inherently and relating in our economy and have not fixed themselves. So how do you see this playing out with the currency? Like you said,
as the dollar starts rising, prices are going to become more volatile for the things the Chinese buy from us, and that's the agricultural products. They're our big customer.
Right.
And so I would expect, all things being equal, I would expect more volatility in the agricultural products, especially in the big ones that they tend to buy next year.
So volatility doesn't necessarily mean higher or lower prices to you. You're not projecting any type of price. You're just saying that we're going to have movement both sides of the trade that are going to be much more actionable for traders, and that's what we really look for. You said something when you started, Warren, talking a little bit about things that you look for and you hop from product to product over the years. As a trader, I think you have to do that. And give us some of the I'd like to hear from Josh first, and then Warren, some of the things that you guys look for in your day-to-day trading. I would love to hear things that you track on a regular basis. Again, whether you're day trading, there's certain tools that you use. Whether you're swing trading, there's certain tools. And I'd like to hear kind of your task list and your rundown of things that you guys look at when you're designating something that you want to trade. Josh, why don't you go ahead first?
Yeah, so that'll be good because then you guys can correct me since I'm the newbie on the block and still learning this game. But I look at indices. I look to see what kind of movement, what kind of range that we're having in indices. I look to see where has volatility been. Do every once in a while look at currencies and look at commodities as just to kind of see if they're divergent or convergent, and then look at some of those leading stocks and how are they moving. And it's not that any one of those gives me a nod one way or the other. It's the confluence of all of those indicators that gives me an idea of whether I'm interested in looking at something. So in a classical market profile kind of approach, I'll look for things that are developing versus distributing. And so if the ranges are getting tighter, that tells me that some type of movement is likely to happen at some point. So then as volume is waning and we're getting tighter, it tells me we're going to move one way or the other. So I don't necessarily know which way, but at least it tells me that, kind of a time frame of when something's going to happen.
And Warren, how about you?
I look at, I use my own proprietary calculations. I look at volatility on a moving 20-day average. I also look at volatility from the high-low. I calculate it two ways. I also look at the volatility of the trading contract to see if the rate of change of the volatility is accelerating or decelerating.
Get into that a little bit more, because a lot of people probably haven't heard that derivative of the derivative kind of talked about in that regard. So it's something that I look at also, but I want to hear it in your words more.
Well, the volatility of the volatility is the rate of change in the volatility from one day to the next.
Mm-hmm.
So if you were trading volatility as a product, then you would calculate its volatility. And what you're looking for is a volatility that's accelerating and not decelerating.
So do you use that? I'm similar, Warren, in that I look at I'll look at the 1 day range of volatility, 2 day, 5 day, 10 day, 20 day, and then further out I go 9 months, 6 months, a year, 2 years, 3 years. Do you plot that regularly in your work, either of you? And Warren, do you plot that and kind of draw its own trend line?
I'm not a visual person. I do everything in data format and tabular format. I look at a chart and I tend to see what I want to see. So that's to control my own tendency of seeing what I want to see.
Right.
I'd rather run something.
That's a good point.
I'd rather run something and have it come back with a result that tells me either yay or nay, or gives me a concrete result, than to try to figure it out from a chart. That's just my problem. Is I'll see what I want to see.
Right.
Well, but that's a valid.
That's a universal problem.
I think it is a valid problem, and I think the tendency with anybody looking at charts is you can find whatever it is you're looking for in that chart, whether it's a trend up, trend down, or no trend. I think you can look for it all the time, and I think the most difficult piece, again, for any trader of any substance is to figure out exactly where you are objectively and without ego and without trying to force something to happen. Really find out where you are with whatever method works. So I think for me it's a combination of things. I like the chart. I like the number. I'm a numbers guy. So Warren, I mean, do you find that you really spend a lot of time looking at the charts? Or rather not versus the charts, then are you tabulating via a spreadsheet and kind of finding the trends showing up via the numbers going up or down?
I use the tabular format. Again, the charts really don't. I try to stay away from them just because of my bad habits.
Yeah.
And
but when you're using, say, Excel or any type of database where you're looking at this information, obviously you're still factoring and calculating trends, I would imagine, as you've talked about it.
Yeah, well, Excel is one tool. The primary tool I use is a free statistical package called R that you can download, and it's a fairly robust statistical package. I don't really like the one in Excel because there have been too many problems found with it.
Okay.
So R is an open source, so it's free.
So is it a Linux-based code?
No, it's Windows-based.
Okay.
It was developed. It's open source. That means everybody's working on it all the time.
Yeah.
Developed at one of the universities.
Does it have APIs to pull data for you? Or are you having to self-input?
You can import data. There are commands in there where you can import from Excel or other data formats.
Okay.
And the other one I like. Oh, pardon me. Go ahead.
Oh no, but does it go out like Yahoo Finance and pull some of the data that you would need?
Yes, you could do that. Yeah, you could do that with R.
Cool.
Yeah, it's a fairly robust package. Competes with SAS, which is a major vendor. The nice thing about it, it's freely available. Yeah. The other one I like to use is a product called Mathematica.
Mm-hmm.
And Mathematica is about $250 for personal use. and you could do some very advanced work with that package as well.
I'm curious, Warren, your type of trading. How would you define your bread and butter? How would you define the bread and butter trade that you put on?
I don't quite understand.
What's kind of your go-to type of trade? Let's not even talk about vehicle now. Let's talk about what kind of things are you looking for when you're looking for a setup in a trade? Time frames. How long will you typically be in the trade?
Oh, okay. My trades are all intraday. They're not intraday.
Mm-hmm.
I like to sleep at night. The things I look for is nothing that would be too surprising to most people. I'm looking at volatility at the top of its range as opposed to the bottom of the range. I look at again, the rolling 20-day vols. I tend to buy to go long at tops and go short at bottoms. And what I'm trying to do is build my tops and bottoms, which may be different than, I mean, one of the things obviously to look at is today's high and low, but also the volatility's high and low for the day. Also looking at what's called co-integrated variables with it. So before going long NASDAQ, I've calculated how Apple and Google, for example, affect the NASDAQ index. So if Google and Apple are going one way and the NASDAQ index is going another, I generally know the odds of
continuing the move or not.
Whether the move is going to continue or fail.
So today I'm curious. Today would be a good example of the NASDAQ, the widest day that we've seen now in not quite 2 weeks, but we're approaching 40 points now, and that was we had a 41-point move a week ago from today on the 4th. So it seems to be the last few weeks. Wednesdays have been the most volatile. Warren, are Apple and Google confirming this move down today? I haven't even looked at them.
Yes, they are going in the same direction.
And
direction, but the signals are mixed.
Yeah.
They're not convincing. They're not coming out and saying, put your money down or put all your money down, so to speak.
Right. So
if you're putting it in there, it's a small trade.
Yeah, and that's really one of the things that I've talked about with our partners recently is this is a very difficult market both to day trade because of the lack of ranges until a day like today, where unless you came in short, you literally had 15 minutes to get short, and then we started the move and we never retraced. So the intraday, as you're suggesting, Warren, becomes very difficult just to hop in because you're starting to get to these support levels. And I just want to show a chart here real quick, and we'll get back to talking. And then the continuation for multiple days doesn't exist. We are just not 2 or 3 days up or down where these trends can continue. And this is quite simply the NASDAQ. We're looking at about a 2-week time frame. This is this little blip here, that gap open, that is Thanksgiving. And then we had Friday, and then we go Monday, Tuesday, Wednesday. So we're looking at 2 weeks back to this spot right here, and that's right where we're testing. And the big value area, the point of control for the last 2 weeks is right here, 34.85. I thought yesterday we were going to trade down to this 34.85 yesterday. Today, it didn't happen at all yesterday. Matter of fact, we closed up high again, about 16.17. We opened there, and then we moved very quickly right, down. We had that big whoosh. Obviously, I'm just curious, Warren, if you saw anything, that have suggested that this thing was moving down before this move happened today, because I just had more of, there wasn't anything in the chart. I just had a big magnet up here that I was looking to trade to, and we did trade to it. So, position was stated. You did not want to be long the last couple of days for sure.
Well, the work when the results were calculated last night, it showed. I calculate what's called a high and low based on the volatility for the day. Mm-hmm. That's assumed that it's what's called continuously distributed.
Right.
And it wasn't. It showed that the likelihood of going down was slightly greater than the likelihood of going up. If it was going to move, it was going to move down and not up.
Right.
And so what it was showing was that around, say, in the Nasdaq, and I can't pull up the chart right now, pull up my spreadsheet,
Okay.
but it looked like around 34.95 was right where the lower end of the volatility range was going to take you. And the reason why I do that a lot is I like to try to think like the algos are thinking. So I know those guys have it all programmed into their systems, the same thing where the market's tending to move.
Right. And you know that because you've worked on some large trading desks and you've seen the way that they operate in small quarters, and what we're talking about what I mean by small quarters is really we're talking intraday trading versus interday trading. These guys have a short amount of time to move a big chunk of money, and that's they try to take advantage as best they can via.
And they live in milliseconds, not seconds.
Yes. Yeah.
So they could put something out and then pull it in literally in milliseconds.
So we're in a time, and you're always in a transitional time in markets, one way or another. You're either transitioning from one direction to the other, or from one direction to flat, or from flat to down, or from flat to up. The last couple of days we were kind of flat, Monday, Tuesday, and then one of the things that I like to see is we have and Josh, you talked about this. You talked about the tightening of range and volatility. We saw it in a big way, and really, if you were positioned, you could have had a sell stop in, say, 35.11 or so this morning, which got you below that that opening area here of 35.12, and you would have had it again. You would have had to have the order in as soon as the first 5 minutes expired. And in the same sense, you could have had maybe a buy stop at 35.21 if you got above that, and it's a pretty quick trade. If it works, it's going to happen in 15 minutes. And when we break that 35.11 again, we go right to that number, and I kind of had those same levels, 35.95, 34.95 to 1 would be the first level, but the big area I was looking for today is right where we're trading here during the lunch hour. So you leave a trailer on and you let it run on your short all the way back down to 84. And again, where are we? We're right back to where we were on Thanksgiving morning. We did trade that morning, as everybody knows. Very small trade, very tight range, and that's where we're holding. We filled this gap that we had from Wednesday that was out there, and now we're just kind of hanging around. I'm curious. One of the things I wanted to talk to you guys about is the non-linearity of trading. Some thoughts on this, Warren. Trading is not a business that you can go into and expect to make X points or X dollars every day, every week, every month. So I want to hear your thoughts, both you and Josh, on this, and how do you deal with it?
No, go ahead, Josh.
Oh, yeah, I mean, that had been a classical struggle for me. There was a time where I would go in and say, hey, I need to make this much on a day. And man, that doesn't work out very well. It's much better now. I think actually it's easier now because I'm only trading part-time, and so I'm being much more patient. It's actually teaching me how to, I look at the market, and if I don't see the stars aligning, then I just don't trade, and I'm okay with it. It's really hard when you're eating off of an account as opposed to growing an account,
right?
To not fall into that trap.
And that's a good point. That's a great point that you bring up, Josh, and you put it in words that I think most people can understand. Eat off that account versus trying to grow the account. I always tell people, unless you have a few $100 grand that you can drive income off of along with your trade, you're probably not going to be able to make an official living off of it. But your job as a trader is still to grow your account. But you're not going to be pulling money out of a $25,000 or $50,000 future account that you're going to be paying your mortgage and your rent and your car payment, etc., off of. So what kinds of things, Warren, you and I talk about this all the time. You and I both are big fans of, as many traders I think do that are in this business. You have to live as if your last trade might be your last trade.
Yeah, I mean, exactly. I mean, it's the thing that's so intoxicating though about it is that you get these random reinforcements. So you'll get this big win every once in a while. And then you tend to forget about all the small losses that you had.
Right.
up to that big win.
Right.
So, I mean, the thing is, my advice is to live frugally and assume that, you know, your last trade is your best trade, and everything else after that is going to go against you.
Yeah. And I think that's good. I think that's good advice. I mean, Warren, you were telling me yesterday your old car that you drive, you had some strut issues, but it's better than a car payment. Most of the time, my two, well, I have 3 cars now because my daughter's now 16, and we're having her share some of the burden of driving 4 kids around. But I've got a 10-year-old car and a 12-year-old car in at my house, and I'd rather not put money into depreciating assets like automobiles. They're fine cars, and they get me from point A to point B.
I think that's, if anything, people should be, in general, should be investing in experiences and not in material things.
Mm-hmm. And
which are more valuable.
And so, talk about that a little bit. What kinds of things do you share with your family as far as those experiences? What kinds of things do you like to do?
Trips, trips overseas to Europe, Canada, Mexico, for example. I mean, I'd much rather spend my time, going on a trip or, seeing something different than making a car payment, for example.
Yeah, I'm with you. One of the things we like to do as a family, and my kids are of the age where they're very active in athletics and they enjoy them, is we like to travel as a family. Doing the same thing. We travel to these tournaments, whether it's football, basketball, lacrosse right now, and we have a great time. And it's the same thing. It's not so much the active competition that's a piece of it, but it's the experiences we have and the people we meet and the different stories we hear from the people that we encounter. Those are the memories that we're trying to create as a family, and I think that's exactly right. Your point that you bring up, Warren, is that you're trying to create these memories and this tenure for family, and I think again, that's the important piece of it, is not to live beyond your means, but have these experiences that are important. Josh, how about you?
Yeah, same thing. I mean, we when we moved here to Colorado. I mean, that was kind of the MO, was move to a place where we could have memories and we'd have access to just great open space and that was accessible and close. And we've started to tap into that stuff, but just more and more as we get settled here and feel comfortable. But I mean, I echo exactly what you guys are saying, because the reality is all that other stuff. I mean, it can be gone, right?
Yeah, it could disappear very quickly. And
yeah, but you can't take away memories that you have with your family. I mean, that's the stuff that lasts. So. Mm-hmm.
Yeah, and the thing, again, Josh, you've got a very level head you've been at this trading game for a couple of years, and I'll just hat tip to you, because you've got a level head as far as it's the right mindset. You do not need to sit in front of a screen. Monday and Tuesday this week are perfect examples. There was not much trade there. Definitely intraday. I mean, it was painful. And I spent a good chunk of Tuesday trying to extract, half the 13-point range, and I was pretty successful. But it was with 2 trades that took a long time just to pull 5 or 6 points out of the Nasdaq. Today is much easier. Obviously, you get a big move down, and it happens fast. The trade's over, and you can move on, and that's it. Now we're waiting for the next setup. And let's transition a little bit here, guys. What other markets are you watching right now, for the coming year? What are you watching for 2014 that you think, Warren, you mentioned grains. You're talking beans primarily, and you and I are in agreement there. What about corn, wheat? I still think coffee, and coffee started to percolate, no pun, the last few weeks, and is shaping up pretty nicely. But what are you guys looking at for 2014? This is the time of year I think you need to plan for the next year and kind of big macro trends that you may be looking at.
Yeah, well, I gotta tell you, Matt, you're gonna have some trouble in the coffee, because my personal coffee buying was gonna drive your coffee price up, and then I found out that my wife wasn't kissing me as much because of my coffee breath, so I've now switched to tea.
Okay.
So you don't get the Schuler bump anymore on your.
Are you doing a mint tea or what kind of tea?
Yeah, I'm doing a mint and some honey, and it's working out very well for me. But oh man.
So Warren, macro-wise, what kind of thoughts do you have for the 2014 campaign as we wind down a year that has been significantly up, and what do you see coming forward?
Well, things don't go up forever, that's for sure.
Yeah.
Yep.
There will be some reckoning. Again, I think it's going to be currency-driven. That the dollar is going to start to rise vis-a-vis other currencies, which is going to roil the markets.
So as we look at, I wanted to bring up a year-to-date performance on the major futures here that everybody could take a look at. And you've got from the Nikkei up 45% down to corn down 37%. Anything stand out here for you guys? As we, I'm in agreement. I think this is. I've seen years like this, Warren, you have too, where we go coast to coast. We gapped up January of 2013. We never filled that gap. And we have been up the entire year. The Nasdaq up almost 32% today for the year.
Mm-hmm.
Russell up 31. The S&P not far behind at 26%. But those are huge, huge years.
Yeah.
You have to look at what the long-term mean is too. Return for these products.
Right.
They're not 25 and 30%. They're
the long term is probably what, more 6 to 8%, somewhere in there.
Yeah,
for the
somewhere in that range. So So it's going to revert back to its long-term mean, and admittedly we're in an unusual time, period.
But we're always in an unusual time period, right? As traders, and we have to acknowledge that it's always different. So how do you guys deal with that? With a Fed that is obviously very unusual, and what do you do? Knowing that we're in this transition, possibly a little bit higher, but very likely we're going to tip over some type of correction. We haven't had a 10% plus correction, I think, in 20 months now.
Wow.
Yeah. Well, I mean, the one thing the Fed, Bernanke, has always said was, I mean, he is a student of the Great Depression.
Mm-hmm.
And he said lack of liquidity is what really drove the Great Depression.
Mm-hmm.
And everything that, if you wanted to know what he was planning to do, all you had to do was read his papers. And
Right.
It was all spelled out. It was no deep secret.
Right.
The incoming Fed chairman, she's equally brilliant, but her focus is on unemployment. Her papers said that Fed policy should be focused on unemployment first, and she's always voted that way. And even in her confirmation hearing, she said the same thing. So the unemployment rate, or I should say, the total employed of the population, the percentage of the population that's working, is going to drive Fed policy.
Right, but the concern I have with that, and I think that's great, but she has no effect ultimately over taxation, which is one of the things.
No, that's a very good point.
Which is driving the employment situation, the lack of growth. I would say, even though the number's coming down, I think that it's a taxation, whether it's healthcare, whether it's overall taxation, that we see creeping in everywhere.
Well, our problems are clearly fiscal and not monetary.
Right.
They originate in the halls of Congress and not in the Federal Reserve.
Correct.
And so it's really, if those guys had come out and said we're having a new tax program and it's going to be a flat tax of 15%, and this economy would boom. There's no question about it.
Exactly.
But the Fed can't do that.
Yeah, but if they did that, they'd lose their job.
Right.
They lose all the donations from their
They lose all their money.
Too.
Right. So, but that is exactly what needs to happen. It's as simple. I mean, whether it's flat tax or simple, haircut across the board.
Yeah.
We eliminate the taxation that is now on the, if you were driving your statistical analysis via R today, Warren, you would see this trend in taxation. So, I'm all for pointing out the problems. Let's throw out a couple solutions for our esteemed congressman.
One thing is, I may not be quite right on this, but I think the United States has the highest corporate tax rate in the OECD now. So our other 19 competitors have lower corporate tax rates, and money tends to flow where it's treated the best.
Yeah.
And if we're going to implement, I mean, let's face it, no, corporations don't pay taxes. They pass them through to their customers.
Right.
So why do we even have one in the first place?
Right.
If we're going to tax it right at the individual level. Don't tax the corporation.
Right.
But
so
that,
if you,
that'll
and so
never
if
fly.
you do, yeah, well, why would it never fly? Just because the man on the street would see it differently, even though it's
Yes.
yeah.
Yeah, they would say they would say even though it's a pass through. The thing is that the tax code is a monstrosity. It seems to be condemned by both political parties, but nothing ever gets done about it. I have a simple solution for it.
What's that?
Just issue a mandate. The current tax code will be sunset in 5 years. If they don't have a new one, then there's no tax. There aren't any taxes.
I agree. It's a simple yet brilliant, and it would work, and it would absolutely work. You cut the red tape, you cut the monstrosity that exists, and you move on. I would love to see it.
Yeah.
Let's talk about this as far as some of the company. There's a lot of money. You said this, Warren. There's a lot of money sitting overseas, whether it's Apple, Cisco. You look at their balance sheets. I think both those companies have something 50 to 80 billion sitting offshore that they're concerned about because they would love to repatriate it, but they don't want to pay that tax.
No, why should they? I mean, they have a fiduciary responsibility to their shareholders. If they keep it overseas, they don't pay the tax. If I, as a shareholder in Apple or Google, I'd say don't bring it back because I don't want you paying the tax on that.
Correct. CFO is doing their job by not bringing it back. So that could be another solution, however, that could bring real meat to the true economy versus, again, trying to have a interventionist strategy that has really run its course. I don't think the Fed has much effect from here on out. Interest rates are already negative. They're already talking about real negative. They're nominally negative, but now they're talking about actually saying to you and your grandmother, hey, you got to pay us to store your dollars now.
Yes.
That's I don't think that's an effective FOMC strategy in the long run.
No, but they can't. All they can do is when you look at the yield curve, all they could do is affect the tail end of the yield curve. They can't affect the long term. So, like they say, they can take the tail and move it up and down, but they can't move the dog.
Right.
And there's just long-term economic trends, that they can't. They're not large. Nobody's large enough to countervail.
Right.
On all this.
Not to switch gears too randomly because there's actually some thought process with this, but mutton busting.
Okay, I got. We'll make this less of a train wreck transition. Are you ready?
Yeah.
Okay, so you pulled up the chart that showed the growth on the futures.
Yes.
Do you still have that in front of you?
I will get it up. Just 1 minute.
And and this ties into what Warren was talking about, just the currency and volatility in currency. It looks a lot to me like a Max Payne graph in terms of option strikes. And look at your Max Payne is right there at your USD.
It is.
Right
here, right in the middle.
All the movement has been, the extremities, but the Max Payne, the place where it's pinned, where people are going to feel the most pain, is going to be right there. I think that enforces that, which is similar to when you decide you're going to go do some mutton busting.
That's true.
Well, that a few weeks ago, one of the largest foreign exchange hedge funds failed. FX Concepts. And one of the reasons why they claimed they failed was they kept on the carry trade when it no longer mattered.
Right.
They just, they've been successful since 1981 with the carry trade, and they just tried to continue to implement it in the last 3 years, and it didn't work.
Right.
Yeah.
And, unfortunately, you could be right year after year, and then all of a sudden you're wrong.
Right.
You have to be smart enough to know when you're wrong.
Yeah. Right. And you got to admit it and just say, look, man, I'm wrong. You're not going to be right every time. So what? You guys are mutton busting in Oregon? Like I didn't think there were any rednecks in Oregon, man.
Oh, there's rednecks in every state in this country. It's been, a matter of fact, Warren and I had a big discussion about this. There is a There's friends of mine. Their kids do it regularly before the real rodeo. All the 12-year-olds down to the 6-year-olds strap on a helmet and they hop on a sheep and they ride that sucker, and it is fun. It's fun to watch.
Yeah, that's good stuff. I went last year to the Colorado, or what was it? Colorado. It was the Collegiate National Finals Rodeo up in Casper, Wyoming.
Yeah.
And I mean, before they bring out the big bulls, man, they got kids mutton busting, and it is a blast.
Yeah.
Total blast.
It's awesome because they can't get gored. Again, they kind of put the flak jacket on the kid. They put they're low to the ground, and those things, they run. I don't know. It's not like a bull running. It's not that fast. And they put the helmet, full face guard, and it's a good thing. It is exactly what's going to happen with the U.S. dollar. This thing has been stuck for not only this year, but it's been stuck for, I would actually say, let me try to bring up a chart here, but I think the dollar has been stuck in place here for really, for this recovery.
And that's by intent.
Exactly. And matter of fact, let's bring up that chart here on the dollar, and let's talk about this a little bit. And you can see this. So, what do you mean by that's the intent of the Fed? I'm assuming you're meaning.
Yes, I mean the thing is that they were.
These are, by the way, before you go, this is a 10-year chart on the left. This is a 3-year chart in the middle, right where we're in balance here. And this is a 1-year chart on the right. So these are some longer-term perspectives before you get into it a little bit.
But remember, we were facing a serious problem of deflation.
Yep.
And what the Fed did was they exported that deflation to the outside world.
Mm-hmm.
And that's the reason why some of these countries now are having a tough time, like Brazil and Mexico.
So this was 07, right before the market started to the stock market, the equity market started to crumble. We were trading down here as low as 71. That's the deflation that you spoke of. And from that point, we started to see the Fed scramble, and we saw the dollar rally as they really, begun. That was QE, TARP, QE1, all happened in this spike that you see in the dollar here, 07, 08, and then we had the equity fallback, but we haven't seen that low again. We made two kind of higher lows here in the last, was it late 09, and then again just middle of 11, and that was our bottom again, 72.86. So how do you guys see this playing out? Again, we'll come back to that. We'll come back to that kind of year-to-date performance chart.
Well, we clearly had parts of our economy are still in deflation.
Yep.
They're still deflating, and then we have other parts that are inflating.
Right.
So I don't know if you can say it's again a Goldilocks economy, but all the Fed's moves are also taken in coordination with other central banks.
Right.
And so they're all, I'm positive they're all talking to each other.
Right.
And they will signal their moves before they actually do them.
Right.
Just so they can work together. For example, if you look at the euro over the same time period, you see that it's fairly well coordinated. I mean, it was.
Yeah.
Yeah, with the troubles in Greece, Spain, and Portugal, and Italy, it's not even in the U.S. interest to have those countries collapse.
Right.
I mean, they had to do something.
Right.
And so, at least from a monetary policy, I'm sure they were talking to each other about what to do and how to keep the euro at a constant level, and whether the euro should be deflated.
Bitcoins, real quick, since it's still flavor of the day. Bitcoins had that huge 50% sell-off last week. At the end of the week, we got down here to 600, but recovered again nicely, back almost doubling again, back to 1,100, trading right around 1,000. What do you guys think? Long term, is it a viable alternative way to transact and do business?
I was going to ask you guys your perspective on, is there ever a point in which you see something replacing the dollar as the reserve currency between these banks? And is a virtual currency like a Bitcoin a potential?
I'd say Bitcoin is not going to be a reserve currency.
Okay.
I could see the dollar being replaced by a basket of currencies, but not a single currency.
Not a single currency. Okay.
What do you think would inspire that, Warren?
Well, what would inspire it is if Fed policy became erratic and the dollar was no longer the store of value or a constant store of value, then I would see people want to change. I mean, the big ones like the OPEC nations still take dollars for everything. If anyone has the motivation to change, what they're getting paid in, it's they do, but they still take dollars. So they squawk and complain every year about it, but they still take the dollars.
I wonder why Ladbrokes hasn't put a odd on Bitcoin survivorship.
Well, they got to make a market for it, and like any other business, there has to be enough people willing to bet on it.
But if they put it up there, they had the Time Man of the Year odds up there. We were talking again about this last week or earlier this week. Time Man of the Year. You could bet if you were Euro side, you could bet who you thought was going to be the Time Man of the Year. They had early projections. Pope Francis at 2-1. He went off, and this morning he was announced as the winner. So Laddie's had it spot on. 2-1 odds. Miley Cyrus, would she go off 50-1, Warren?
50-1 yesterday. As
the Man of the Year. So maybe some type of hedge there. You put $100 on the Pope and $1 on Miley, and you covered yourself. Not a bad little bet going into the announcement today.
That's a tweet for later today.
Let's talk a little bit about Macau. Warren, you and I were talking about this. 6 times the revenue now coming out of Macau casinos versus Vegas. That's 6 times revenues. I don't think people understand the scale. And I went back and looked. It was actually January of 2007, Warren, that Macau overtook Vegas in total revenues. So we're talking 7 years now. Not only did they overtake Vegas in 2007, January of 2007, but they've 6-folded the revenues that is provided out of Vegas.
Wow, unbelievable.
Yeah, the gross revenue, from what I understand, this, and I got the second hand, was the gross revenue of Macau of all the gambling, all the casinos, is 6 times that now of all of Las Vegas. And it's primarily being driven by Chinese.
So let's talk about this from a macro level, because I think there's some essence in having this discussion. You've got all the Asian population now. They go to Macau versus the whales. I'm talking big gamblers. The whales from Aussie, also Kiwis. Anybody that Vegas maybe used to fly in, they've lost that income, and that is significant. Most people don't realize, but that's probably the most significant income for gambling entities, is this big money. It's the whale. The whale is what, because they still lose, and why not get 20% of your, versus getting 20% of your income from 80% of your customers, as all businesses. Vegas wants to get 80% of their business from their whales, and that's what they do. So this shift, what does it mean for the macro economies of the world and where we are, and kind of this macro discussion we had on the U.S. dollar?
Well, it tells me if you want to become a billionaire, build a casino in Macau. Or don't buy a casino stocks that don't have a large footprint in Macau.
Which Wynn does, by the way.
Yeah, Steve Wynn actually saw this back in like 2005. He was saying, Macau is going to be big, and people don't understand how big it's going to be. I think Las Vegas Sands has a very big footprint there.
And you were talking you and I were talking again offline about some of the superstitions that go along with the Asian gamblers. And one of the things you mentioned was card bending.
Supposedly they toss out 14,000 decks of cards a day, because they allow some of the Chinese gamblers believe they could change the card when it's dealt to them. So they have this way of turning it up and folding it to make the card advantageous to them. And it's a superstition, but they let them play into it because they're making so much money that, you know, a deck of cards is cheap compared to what they're going to win from that gambler. But
So,
you know, they are, from what I understand, their primary customer is Chinese
gotcha.
at those Macau casinos, and they're from mainland China or overseas Chinese or whatnot. But it's catering to the Asian population. The other
Okay.
thing that people forget is the big sporting events, the boxing events,
Right.
are now in Macau, and it's because the United States, in its wisdom, has a special tax on these. So these guys don't want to pay the tax. They go to
Yeah.
Macau and have their
Yeah. You were talking about Manny.
Manny Pacquiao. He doesn't
He
want to pay
doesn't
the
even,
tax.
he doesn't even want to fight in Vegas anymore because he's got to pay this, again, additional tax just to commit his fight to Las Vegas casino.
Right.
Not only does he have to pay the U.S. taxes on income, but he's got to pay an additional surcharge just to have that boxing match held in the States. So does this shift the power in the markets, in the free markets, to, you know? I mean, I think it's been happening for years, but, you know, first opinion. What is, Josh? What is the financial capital of the world today, in your opinion?
Shanghai.
Warren?
I think Shanghai may be in the future, but I still think it's here in the U.S. I think that what you were saying about the free markets, it's ours to lose.
That's a good point.
And if our market should be the freest, not only free, but the most transparent and the most accommodating in the world. I mean, if people want to list their companies, whether they're in Hong Kong or Australia or Uzbekistan, they should be coming to the United States to do that. They shouldn't be going to London or Shanghai.
Right.
So I would say they're a competitor, but it's ours to lose.
Yeah, and in the same sense, I think the U.S. is smart, you know, to go the way of the Euros and allow people to punt and gamble on anything they want. You know, why don't we have Ladbrokes? You know, it's going to happen. It's just like you said yesterday, Warren. The states want to control it, so let them control it. I think doesn't New Jersey start to have some online betting going on as far as football games? And there's a couple states maybe next year. Doesn't that start next year?
I don't know, but I know when they pulled off online poker,
Mm-hmm.
It was because of an act that George W. Bush signed in 2006. So there's no online poker you can play anymore like before.
Right.
I mean, the logical place to host online wagering is in Nevada.
Right.
The Nevada casino should be running it for the whole country.
Well, people like Cantor have moved out operations. They're running the largest sportsbook, aren't they now? They've got to be pretty close.
Yeah, they're in Cantor Gaming, I think it's called.
Yeah, so I think they're setting up for that. And again, if you are a true free market believer, this is again, these are the types of things that should be, you know, whether it's markets, again, get the invisible hands, the shadow banking out of them, and let's let markets fail quickly. Let's let companies fail quickly. That is the anti-fragility that all of us want out of markets. We want volatility. Volatility is not a bane.
Mm-hmm.
Why is it, Josh and Warren, that, you know, the Fed thinks that volatility is a bad thing?
Okay, so honestly, I think it's that they think about what happens on the extremes of volatility and what that means to. I mean, you know, I look at volatility. I love volatility. I'm anxious for more volatility because I know it means opportunity, and I think that they keep it in the wheelhouse of that. You know, the reality for a lot of people is that they don't know how to leverage the opportunity that volatility brings, and it just crushes them.
Yeah, but volatility brings freedom of choice. It brings ultimately it brings. You even see it now. I think the last decade, people really are moving around the country. You know, you're unusual. I moved 13 years ago from the Midwest. People that are stuck in the places they are stuck because they need a job, they need whatever it is. Their house is underwater. They can't move. So this intervention has crushed volatility, which in essence has crushed spirit of innovation. Volatility ultimately brings the innovation that is needed in any successful society. in my opinion.
Yeah.
Well, and
Yeah,
also
we're absolutely aligned. Yeah, I just think from it's the counterintuitive thing that policy has gotten into. It's like we're going to try to keep things status quo, as if that's going to provide more opportunity for people, and it's just not.
yeah, I still think it's our strength is in market innovations, and getting foreign companies to want to list and do business here in the U.S.
Mm-hmm.
That's the real key.
And companies still want to do it, yeah.
Well, most want to do it. Some don't want to deal with the American government right now. But
Right.
if a company, I mean, there are plenty of companies in the world
Right.
who should be going public here in the United States. They shouldn't be listing in Hong Kong. They shouldn't be listing in London. I mean, the big one that I was thinking is Glencore
Mm-hmm.
from earlier, the past few years. Glencore, I think, listed in Hong Kong.
Right.
Why didn't they list in New York? That's where they should have listed.
Well, I think the trite answer is too much regulation, too much intervention. Yeah.
Obviously, but the thing is that I think the greater benefit would be in New York, and that brings us. I think we discussed one time what is the social benefit of trading,
Mm-hmm.
and a lot of people think of trading as a zero-sum game. You can, you even hear that in university courses, and I don't agree with that. I actually think it's a positive-sum game.
Yeah,
Because
you and
what
I
happens
agree.
because what happens is you have somebody who makes a trade and there's a winner and loser. The
Mhm.
society benefits in the long term because of price discovery.
Correct. And right
So
now
you don't have to be a participant.
And right now we're lacking true price discovery, and that's kind of full circle what we started this conversation. You're not seeing, intraday or intraday is very difficult as far as the price discovery. There's very little going on because basically people are removing their chips. You're seeing a ton of the high frequency algos placing false orders, removing false orders. That's really all that is going on in the market. It's basically guys, spoofing each other, but there's not a lot of active participation ongoing. Two more quick topics, and I've done a video actually on that zero-sum trading, and that will be posted here later, not today, but in the next few weeks. Julia Louis-Dreyfus, do you guys watch Veep? Do you watch on HBO? Warren, do you catch that show?
No.
It's a good interview this week. I think it was on vulture.com. Check that out. We'll probably put it out on our newsletter. Sign up for it. It's a free newsletter. We don't just talk about markets, but we talk about things that are macro related. Great interview. I highly recommend you read that.
But she is related to markets.
She is related to markets. So
Louis Dreyfus Trading is her family's business.
That's correct. And she's technically not a billionaire today.
At least that's what she says.
That's what she says. She didn't make her billions from acting, although she made a bunch from Seinfeld. She's definitely cleaned up, but she wasn't one of the writers like Larry David. ACLs on the up and up. I read an article. It was in Grantland this week, talking a little bit about the incidences of ACLs, and it's not so much large hits in football. There's already been 30 NFL IRs, injury reserves, this year through October 23rd versus 32 all of last year versus 25. The studies basically show it's the way that the athletes are landing, not bent leg, but stiff-legged. So they try to avoid the hard hit, and they end up stiffening their leg, and that's how they blow out their knees. So that's what's happening. Our athletes are becoming much athletic, I guess, and avoiding these hits, and they end up hurting themselves, whether it's skiers, whether it's football players. So think about this. Be more athletic. Take the hit. You're better off as an athlete. Crashing on the skis versus trying to plant the other way and avoid it. You'll actually save yourself some injuries. There's a lot going on out there in the marketplace, guys. We've got to end this. Thanks again, BTFD. Buy the freaking dip. We've got a little 1% dip going on from the top of the year. 35.25 was our high. We're trading 34.90. So that's right. We are down 35 points, 1% from the high for the calendar year. We'll see you back here next week live at BTFD. Thanks, Josh. Thanks, Warren.
Thanks, Matt. Thanks, Warren.
Okay, goodbye.